Hey, real life traders from around the world. This is Jerremy Alexander Newsome with, of course, Real Life Trading. I hope you had a good weekend. I had a good weekend. I actually didn't do too much. I recovered and rested, getting over the last leg of my sickness, watched a lot of movies, played a little bit of poker with Ashley, relaxed, and that was pretty much the extent of it. Watched that movie Maze Runner. That was pretty good. And yeah, just got a chance to relax. It's kind of raining and a little cold in Nashville, but the market is looking nice. That is for sure. A lot of things going on. Hopping over to Tesla really quick. Tesla was one of our trades that I looked at in depth in the trading floor not too long ago on one of Transportation Thursdays. And we talked about how bearish we were on Tesla. And this was kind of our do or die circle. And if Tesla kind of trade up into that circle and failed, that we'd be more bearish than bullish. And that is kind of exactly what happened. It did trade up in there and fail. And we have a bear call spread on Tesla expiring in the not too distant future, 235, 240 bear call spread. And just recently, our bearish short-term swing trade on Tesla triggered bearish at 209.33. And at this point, we have a 194.67 target on Tesla. I don't know if we will reach it today in the market. Probably not, but maybe sometime this week there's a good chance and a good opportunity that we really could. And if we do trade down to this support, I would like to trade sideways and then continue to roll over if we are going to trigger the bearish, longer-term bearish entry at 191.69. But right now in Tesla, really good retest gap today. Beautiful retest gap, in fact. Black candle, gap down. Here's the retest. Here's the failure. Here's retest 1. Here's retest 2. Here's retest 3. And this is probably retest 4. Where we'll more than likely, trade sideways and pull in a little bit farther potentially on Tesla. But as of right now, look a little bit more bearish than bullish, which is quite interesting. And that's kind of what the market looks like in general. SPY, which granted I was more bullish than bearish on, especially Friday, had a bullish entry at 204.96. Wanted kind of a breach above that after we had this little pennant pattern on Friday. And today it looks like we broke out of that bearish, trading into this little potential pennant pattern. We kind of came in there with decent volume. So a lot of my protective puts are triggering right now on positions that I might be in. And SPY looks like it could be one of them. So as SPY filled this gap, we are at the moment getting a little bit of a lower shadow. So here's the S&P 500. Breaching this low from the other day is really quite interesting. So if I hop back over to SPY, the gap, not specifically afraid that it filled. We still could gap and bounce bullish from here, but the fact that it did fill does make me lean a little bit more towards the fact that we might get a little bit more 2015 sell-off before we get another bounce potentially. These candles looking a smidge more bearish and bullish. And again, same thing with kind of the DIA. Got the gap fill from the hourly chart. We did not get the bounce that we anticipated. So did not get triggered in on the bullish move on the ETFs for the indices, SPY, DIA. But keeping a close eye and seeing how these in fact play out. Here's the QQQs, again, filling the gap. And, we really could trade, and we might end up just trading sideways in here. So for the next few weeks, I think after probably until earnings season's over on the indices, I might be considering some non-directional trading, like, cred spreads, things of that nature. But Apple, AAPL, Apple today as well did in fact trigger a protective put and might be shaping up to some type of very interesting evening star reversal pattern if we continue to play out this way. We have some black candles. Earnings is kind of coming around the corner. So if we do start rolling over here bearish, I'm going to hold on to some of my protective puts that I am about to get into actually right now. And next target on Apple will be about 103.65. Anticipating earnings to be bullish on Apple. It should gap, it should bounce up, but you never really know until it happens. So it'll be really interesting to see. So today, nice little black candle on Apple. We'll see an evening star reversal pattern, and it's only an evening star reversal pattern if we do continue lower tomorrow. So if we continue to get a black candle, let's say we end the way we are ending right now, we continue a little bit lower. That'll be really interesting to see. The hourly chart on Apple, ladies and gentlemen, it appears to be bearish. It looks almost like a double top pattern to me. This is the neckline right about now. So keep an eye out for Apple to probably roll over a little bit more bearish, and keep your eye on that, because if that does indeed happen, hey, good, we can make money either way. So on my bullish position that I'm in on Apple right now, I'll get into some covered calls right here, get into my protective puts, and if we close below 108.42, I'll exit my shares, and then just continue to hold on to the bearish position and see if we do in fact roll over a little bit farther on Apple. And last but not least, today, very nice little gap on SanDisk. It's paying a few mortgages for some real life traders out there. Very, very nice little retest gap. Strong gap for sure. I mean, a gap below this pivot, gap below this pivot, gap below this pivot. So it absolutely, without question, traps some people. And on the 5-minute chart, you can see how beautifully it did indeed retest. Right here, retest, it failed. So you could begin to get embarrassed back in here. Maybe this candle, maybe even this candle. But either way, right now, SanDisk does have a bearish edge on it pretty much for the rest of the afternoon. So the fact that we're battling with this low at the moment, I would absolutely love for it to trade up into the 20 exponential moving average on SanDisk, and then continue to roll over just a little bit more on the 5 minutes. Kind of my anticipation, my thought overall. And ultimately, next target probably $80 potentially on SanDisk. You guys know SanDisk is definitely one of my all-time favorite stocks. That's a trade. But 81.54, so probably the next target that we very well could get to today. If we don't get there today, probably the next few days we'll, tramps just a little bit lower. Strong gap action right here. Some good support from this pivot, and I'll be keeping a close eye on SanDisk as well as a few other stocks that are gapping down as the trading floor opens in about 45 minutes. So I hope to see some of you guys there. Otherwise, Michael Larkin, thanks so much for the phone call. He said he really enjoyed last Friday's real life stock review during market hours. So I dedicate this one to you, big guy. Thanks for the phone call, man. I don't know if you get text messages, but I did text you back. And hope you're having a great Monday. Hope you had a good weekend. And I appreciate all the real life traders out there. Thank you so much for doing what you guys do, making this profession awesome, and spreading the word about real life trading. Have a great Monday. I'll see you guys Wednesday. And until then, remember, love life, live life, and trade it. Talk to you later.